Control is service. So all of our operations are done in-house.
What's up, guys? Mike Holt here. Just wrapped up a great interview with Dan Hrey of Fairway Mortgage. We talked about the market here in Phoenix, what it's looking like for buyers right now at this time. And then he also talked about how he's helping more buyers qualify despite the higher interest rates. So if you're a first-time home buyer, self-employed, just looking to buy a house in general, he's got some great tips and strategies to help you buy the house of your dreams. So without a doubt, we'll jump right into it. Thanks. What's up, guys? Mike Holt here, your Phoenix Realtor. I am with Dan Hrey of Fairway Mortgage. We're going to give you some information on the market and the loan process. Thank you, Dan.
Thank you for having me, buddy. I appreciate it, and I always like to learn about the real estate market.
Awesome.
So.
Thank you. I guess we'll jump right into it. Tell me a little bit about yourself and what do you do?
So I am a producing branch manager for Fairway Independent Mortgage Corporation. I have a team, we're a top 1% lending team, but really my passion is helping my real estate partners grow their business by providing whatever type of support that might be for you, whether it's using our operations team in-house to close loans faster, doing joint marketing ventures, anything that I can do to help you grow. As you know, I'm typically willing if I'm going to be an exclusive lending partner, and we've been in the business 15, 16 years, closed 300 loans a year or so we've pretty much seen everything there is out there.
Yeah, I've known you for roughly 8 months now.
Yep.
And you've been A-plus service to both me and my clients, so I can't thank you enough for what you've done.
Thank you. I appreciate that. And I have to give you some kudos because what drew me to you is the way that you do business. It's amazing. My team loves you. I know that you like to work with a specific loan officer on my team. You guys get along terrific. But what we love about you the most and what clients should know about you is that you are a straight shooter. You tell people how it is. You cut to the chase. But the biggest thing that I know about you that makes me feel great to work with you is that you are always going to do the right thing for your clients. And you like to put yourself in their shoes. I mean, we've had those conversations. You're a guy that I know and trust is going to go, how would I want to be treated if I was the buyer? And that's just a great feeling to work with great people like yourself. So thank you. I appreciate the partnership.
Yeah, one of my big approaches is if I was going through the home buying process for myself, what would I do?
Yeah.
And I give that advice to my clients. So
yeah,
thank you for that.
Yeah.
So kind of tell me how you got started in doing loans and the whole kind of mortgage industry.
Yeah, so I went to college to be a financial advisor. Parents didn't have money and it was a little bit tough growing up, and so I wanted to learn about money and always had a dream of buying a home and helping my parents buy a home. And chickened out after college to be a financial advisor when I found out that I would be paid like $500 to $1,000 a month. Until I got my Series 7 license, and so jumped into the lending world, was a broker in Los Angeles area, found out I didn't like the broker world so much. I felt like not everything was easily understandable, I guess is the best way to put it. I mean, don't get me wrong, I think some brokers are the best lenders out there, but at the time, brokers were making a lot of money and it wasn't required to be disclosed to the buyers. So like my first closing, I went to the signing and saw how much money the broker made, and it was listed there on the settlement sheet, and I felt awful because my buyers were first-time home buyers, and I was making a very small portion of that. So after that, got into lending with the banks. Started at JP Morgan doing inbound lines of credit, and then eventually became a loan officer. Left Chase, went to B of A, then decided I never wanted to work for the banks again, and found a correspondent lender ultimately, which is what Fairway is. Just gives me a lot more control. My business is very relationship-based, trust-based. I want to work with realtors and be able to do what I say I'm going to do and just have ultimate control. So that's my world now. I run a branch that has in-house operations. So my transaction coordinators, assistant processors, underwriters, all just touch my branch's loans. So we can close deals in 8 days if we need to. Communication is top notch. I'm able to mold my processes and my systems the way that the way that I want to and need to provide incredible service for my realtor partners and clients. So yeah, it's tough to imagine being anywhere else right now.
Awesome. So you said you closed a deal in 8 days.
Yes.
That's practically cash
Yeah, yeah.
when it comes to that type of stuff.
So 8 days is the fastest that you can close a deal per regulations now, and we can do that on a regular basis because 4 or 5 years back we started doing pre-underwrites on every lead that comes in. So a lot of you have probably heard of doing a pre-approval or a pre-qualification. What I encourage with my realtor partners is tell your buyers when you send them over, we're going to do a full underwrite. So we may take a day or two longer, but we're going to ask them for everything, put them all the way through underwriting so that underwriting does an income review, verifies their assets, even does the employment verification, so that when you find them a home and start making offers, it gives you leverage to be able to tell the seller, hey, we're going to go in hard here, and my lender can close in 8 days.
Yeah. I know any type of multiple offer situations, the stronger as financing you can show, it's 100% going to make you stand out.
Yeah.
So,
yeah. Well, we started testing that 8, 10, 15-day closing when the market was crazy here not that long ago for almost 3 years, and we had a couple of months where we would close 15 purchases in less than 15 days.
Wow.
We had a month 3-4 months back where we closed 15 purchases in less than 15 days, one in 8 days, one in 10 days, one in 12 days.
Wow.
And it wasn't like we were begging for that to happen. It was just because if we wouldn't have done that, our buyers and realtors wouldn't have had those offers accepted, like you said.
Yeah, tons of cash buyers out there last year that had to do everything you can to beat them out.
Yeah.
So in a difference from kind of last year, it was the crazy market, 10, 15 offers on every single house. So we've seen quite a shift in the last few months. What advice would you give to buyers considering to buy right now? Is there anything you're doing to help qualify more people with higher interest rates?
Yeah, so we are, believe it or not, getting first-time home buyers lined up right now. And I think the biggest thing that is coming out is, what are people paying for rent? And then what does that equate to in regards to like a purchase price for a home? So, rates are up and we all know that, but in my opinion, now is always a good time to buy, whether it's no matter what the rates are. I grew up again in this business. Before I got in this business, I was a financial advisor minded person. So I look at myself as a mortgage advisor. So one of the first questions I ask every lead is like, what are your goals? And whether they own a home or don't own a home, I know they want to buy a home, but I like to dig into, tell me about your financial goals, not just your goal of buying a home, or why do you want to buy a home? Is it because of what, or do you want to get closer to your parents or your family or closer to a school? So we really like to dig in and get into details and kind of pull out from our buyers all those little goal type things, dreams that they have about not just owning a home, but future financial dreams, so that we can be a part of that. That's really what drives me. But getting home buyers ready right now, a lot of these first-time home buyers either need credit repair or simply don't have credit. Like they have a lack of credit is what we call it. So used to be that, when I was at the banks, we'd say if you're within 3 to 6 months of wanting to buy a home, go ahead, do an application, let us start working on it. But when I was at the banks, I didn't have a credit team, right? So now I have a built-in credit team. They're Fairway employees. It's not subbed out. So, I can run somebody's credit, and I tell people now, if you're within 12 months of wanting to buy a home and you're a first-time home buyer, let me get an application from you. There's no cost to do it. There's no obligation, but it allows us time to see what your credit is, review it, and then it allows us time to get either your score up or build your credit in general if you just don't have any credit.
Yep.
So yeah.
I know one concern that a lot of people have out there is maybe they're 6, 10 months out from buying a house. They're concerned about getting their credit pulled now.
Mm-hmm.
Can you dispel any kind of misconceptions around that on whether it hurts your credit or if it like dings you in any way?
Yeah, so for the most part, especially if your credit is really good, so really good, top tier in my world is a 740 or higher mid score. If you're above a 740, it's not going to hurt your credit to run your credit like once every 4 months, let's say. Your inquiries, we do see them when we run your credit. Like if we run someone's credit, we can see how many times they've ran their credit in the last 120 days. But if their credit is on the high side, typically you don't even see your score moved at all. Now, people that are running their credit multiple times, let's just say 7, 8, 9 times within 120 days for different reasons, it for sure is going to hurt somebody's credit. I can't tell you how much it's going to go down, but generally, the lower their score is, the more it's going to hurt them, the bigger impact they're going to have with running their credit. In my world, though, unlike the banks and unlike the brokers, I only have to run your credit one time. Your credit pull is good for 120 days. So when your buyer comes to me, that 120-day mark for you to close the buyer is ideal because we can run their credit now, and as long as we close them before 120 days are up, we don't have to rerun their credit. But again, if their score's on the higher side, typically if we have to run it because they don't find a home in 120 days and we run it after 5 or 6 months, it's not going to impact them.
Gotcha.
Good question.
But big thing is just knowing where you're at credit score wise.
Yeah, that's the big thing. So like if someone comes to you and they say, my credit's terrific, and in your head you're kind of thinking, well, what does that mean? Because it's all perspective. If they're doing things like Credit Karma or their credit cards are monitoring their credit, I'm not somebody that's going to say, well, that doesn't count or that doesn't matter. It will give you a good perspective or guide as far as if your credit's good or bad. They just have their own scoring metrics. So it's not the same as a mid FICO, but it should tell somebody whether their score is on the high side, mid score, low side. But if they have no idea, and if they only have one trade line, or they say, you know what, I don't have any credit, those are the people you should just say, get over with Dan, let him run your credit, and don't worry if it's bad or you don't have credit. His credit team within 24 hours can give you a plan on how to get your credit score up.
Yeah, I know I've got multiple people working with you guys right now. Like they're looking out in Q1, but they're getting ready now for that purchase. So it's really good. You mentioned a little bit about rent and things of that nature. With obviously one of the big things out there is everyone needs a place to live.
Yes.
It all comes down to, are you paying your own mortgage or are you paying someone else's mortgage? So one of the stats I pulled up here recently is the median rent here in Phoenix is $1.55 per square foot. So if you're looking at a house that's 1,750 square feet, roughly the average size home here in the Phoenix area, that works out to $2,700 a month in rent. So can you tell me a little bit more about how much house you could afford with that type of payment?
Yeah, so believe it or not, you can afford a house for almost up to $400,000 with just 3% down at a $2,700 a month payment. So I think, there's a lot of skepticism or just maybe negativity with the media or the press in regards to where interest rates are right now. And trust me, I understand rates were not long ago below 3%. But again, if you're somebody that's renting, those are good numbers for you to know. You and I talk about them a lot. And I mean, I know you like to deal with all types of buyers, but first-time home buyers seem to be somebody you really like to work with. And I think it's because you love to educate people about the process and so forth. But little bit less than 400,000, like 390 to 400 is with 3% down. So 3% is $12,000 down. You can get a gift from family members, multiple family members. You can do half of it and a family member can give you the other half, whatever it might be. It could be a combination of the two, or it can even be a down payment assistance loan where you can get a grant for up to 5%. But the bottom line is a lot of people don't know that number. 2,700 average rent. And next year it's probably going to go up to what, 2,800?
Yeah, basically rent is always going to increase as the population grows. Housing, we're short on houses right now. So rent's just going to keep going up.
I mean, Phoenix is crazy. As you know, I work in California as well. The rents are crazy there. So, I think there's a couple of things I tell first-time home buyers, especially ones that don't have a tax advisor, for example. Before we get too far down the road and you start making offers, get with a tax advisor, which I'm happy to recommend to somebody, and ask them, if I were to buy a home and I can tell you what the mortgage interest deduction would be for a $300,000, $350,000, $400,000 home, ask your tax advisor, what would my taxes look like? Because I will tell you that 80 to 90% of the time, if you're breaking even on your taxes, once you have a mortgage interest deduction, you're probably going to get a little bit of a refund. So even if you're paying a little more than your rent, you're going to get that offset with a refund check at the end of the year.
Yeah. Plus, you're paying down the principal, so you're paying yourself back every single month, and then you have a fixed payment basically.
You have a fixed payment. You have all the ability and time in the world to make more money, as you know, and real estate really doesn't. It's just such a good investment. I mean, especially in an area like Phoenix. I really feel like people that are driven to have financial goals, the sooner you own a home, the better.
Yep.
Because that just works towards your retirement, towards your financial freedom. And like you said, every month you're paying that principal down.
Yep.
Yeah,
like I guess kind of we've talked a little bit about the market. We've gone from an extreme seller's market into a buyer's market. Some of the big things that we've both seen at this point is, one, seller concessions start to come back. Houses sitting on the market for longer. One of the big things that I like to share with people is the average list to price or list to sold ratio right now is 97% of the list price. So prior to like last year, everything was going 25, 50K over list price. Now we're seeing stuff you can actually get it under list price. But one thing I want to give very good advice out there: if a house has just gone on the market a day or two ago, don't expect to get a deal under list price. I've worked with a few people where they want to offer 100K under, but you're not going to get a house that way. You're going to insult the buyer, or you're going to insult the seller, but they're not going to be happy.
Yeah, that's great advice. I think that's great advice, especially buyers. If you just feel like that's the home for me, you do not want to piss off the sellers right out of the gate like that, because chances are they're not only going to say no, but if they counter, because they're so mad, their counter is going to be just as obnoxious as your first offer was.
Yeah, they're like, okay, our list price was 400. You offered 300. We're gonna counter back at 398. It's like, you gotta meet in the middle somewhere.
That's great advice. That is awesome advice. I love it.
So seller concessions. I know I've done some videos in the past on this. You've done some videos on this. Kind of give an overview of what this means for buyers out there.
So seller concessions can be used. I guess that's the best thing I could talk about, are all the things it can be used for. So I think you're one of the partners that has told me sometimes sellers are more apt to give a seller concession versus dropping the price a ton. So it depends. You really should listen to your realtor in regards to what strategy you're going to take in regards to making the offer and getting the offer accepted. But when it comes to concessions, which are really fun for lenders, for all of you to know, I can use a seller concession toward everything under the sun except the down payment. So what that means, I can use the seller concessions toward lender costs, title and escrow costs, the impound account, which is the taxes and insurance, the interim interest. I can use seller concessions to buy the rate down. So, we've seen some big seller concessions recently of $20,000 seller concession, $30,000 seller concession. And closing costs, let's just say for a $400,000 home, might be 2 to 2.5%. So let's say its closing costs are $8 to $10,000. If you have a $12 or $15,000 concession, a lender can take the difference of that and buy your interest rate down, which is amazing, to do. So oftentimes the seller concessions are going to get a buyer a lot more benefits versus dropping the rate down 12,000 or so. You just have to weigh the two things out. But seller concessions are an amazing tool, and the really good realtors out there like Mike are going to be able to show you, how you can use those seller concessions to leverage and come out of pocket with a lot less money at closing.
Yeah, makes sense. I know there's a lot of people out there that may run their own businesses, they're self-employed.
Mm-hmm.
Do you have anything specifically geared towards those people, helping them buy a house?
We do. We have self-employed. The best program we have out there, and we have a couple of them going on. We have 4 of them going on right now, is a bank statement program. A lot of people like to describe it as a stated income program. It's not necessarily like the old stated income programs, but what it is the bank statement program. We take from a business owner that's owned a business for at least 2 years. We don't take the tax returns at all. We take either 12 months of bank statements or 24 months of bank statements if 12 months doesn't work. And we look at the deposits that are going into the bank statements every month to generate an income. If you guys are wondering, it doesn't need to be a business bank statement. It could be personal bank statements because some business owners just have money go into their personal accounts. Or it can be a business account, but essentially 12 or 24 months bank statements, and we generate an income. The 24-month bank statement program has a higher rate versus the 12-month. You do need to be a 680 minimum FICO score.
Okay.
If the loan amount is going to go over $1 million, you need to be a 720 minimum FICO score. But it's an amazing program. The rates are a little bit higher. The last one that we got started probably a week and a half, 2 weeks ago, was an 8 3/4 interest rate with no points. If you want to buy it down, you can buy it down by paying a point, getting it 1/4% or 0.5% better. But the bank statement program is amazing for self-employed buyers.
And are the down payment amounts needed for that same as FHA?
20% is So 20% is going to be the minimum for that. Which is a lot more than a standard conventional loan, which you can do as little as 3% or 5%. FHA you can do as little as 3.5%. But you're going to need at least 20% down for a self-employed bank statement program.
Thanks. So recently I've kind of shared about a client that decided to not work with you after I referred them.
Yeah.
But so a little backstory, that lender dropped the ball. 2 days before closing, the underwriting team found something that they needed fixed that they could have caught much earlier in the process. So kind of tell me a little bit more about your team and what your underwriting process looks like to avoid delays.
Yeah, that's awful, and I'm sorry we started out talking about that today, and it drives me crazy because it just happens so often, and I try to give grace to lenders that are in that situation. Because I feel like sometimes it's not necessarily the person's fault. It could just be the company that they work for, right? But as I was told after being in the business, working for banks for 2 or 3 years, what kind of an idiot are you working at a bank when you have no control and they're going to just wreck your name? And I mean, you're probably never going to want to go work with that bank again or with that loan officer. So I think control equals service, and I think it's easy for me to explain that to realtor partners that I work with, because every time we touch your client, we let you know, whether it's a text, an email, or a phone call. You're never going to get surprised. Our big motto here is don't get surprised. So there's 3 things that we run off of: speed of response, communication. We try to over communicate, and then no surprises. Surprises suck. We all know that, especially when there's money and a timeline involved. So we try to pre-underwrite everybody that you send over, and we have, I feel like, more support than anyone out there within my team, because we have the credit team. We have a transaction coordinator that will do income reviews within hours sometimes. So, as long as my realtor partners are encouraging their leads to get us the documentation that we need up front, and we're working in tandem together to say, not just give you a pre-approval letter before we have the tax returns for someone that's self-employed, or before we have the W-2s. I mean, under certain situations, if you're trying to get an offer in and your buyer is a W-2 hourly rate employee, and they're like, Dan, I'm at work, I can't get you a pay stub. Typically that's going to be okay, but you know how I'm going to do it. I'm going to say, hey, Mike, I'm going to give this to you, but I don't have the pay stub yet. I know it's coming, but I figured out his hourly rate and I've ran their credit and so forth. But control is service. So all of our operations are done in-house. We are not subbing out our processing, our underwriting. All of our operations team works for Fairway, and they're under my umbrella. So it just makes the process very efficient. Surprises don't come up, and sometimes even when your leads or buyers, may go back to you and they've told you, I'm going to put 20% down, but they come back to us and go, can I just do 10% down? We're going to call you and we're going to say, hey, Mike, they changed. Doesn't mean it's not approved, but just so that you're aware, this is what's going on. So I think, we really lean into the no surprise approach. You've probably heard it in my office because you've been in here before. My team makes fun of me, and they say, Dan's no surprises. Because that's just that's the worst thing you can do to a realtor partner, is surprise them by something. So control, I would say, equals service, and we have more control than anyone I know in the industry.
Yeah, that really goes well. So you're no surprises, I'm no BS.
Oh, there we go.
It works out perfectly.
There we go. That's awesome.
So we'll kind of wrap this up here. Are there any kind of closing thoughts that you want to give the people?
Do I not get to ask you about the real estate market?
You can. We can do that.
We need to do that.
So to ask me about the real estate market.
Look, the real estate market is changing all the time.
Yes.
I mean, I love that part of my job, and I think the good realtors out there, and who all of my partners I think are amazing people and incredible realtors, like the ever-changing market. I mean, it's just changed so quick. So I would love to hear, and I think our audience would love to hear, if you're looking to buy a home right now and somebody comes to you, what are a few things that you're going to tell them? What kind of advice are you going to give them so they don't get surprised before you start looking? Can you share that with us?
One of the big things is, I always like to tell people, is know what your end goal is. Are you currently renting? Do you have a deadline you need to be out by? So know the timeline that you want to be into your new place. Make sure that when you're coming to me, like I said earlier, I love to educate people. So if you're a buyer, you're a seller, I like to walk people through the process. And a big part of that education process is where we're at in the market. So one of the key stats here that we have access to is called the Crawford Market Index, which tells us where we're at as far as a buyer, seller, neutral market. Last year at this time, we were at 350 for Crawford Market Index.
Yeah.
And for a balanced market, that number needs to be between 90 and 110. So
so where are we now?
We're at 104.
Okay.
104.
Okay.
So it's shifted a lot. Buyers have more opportunity, more choices. There's 20,000 homes available here in the greater Phoenix area. So
what's average on the market in Phoenix area?
So it kind of depends on what you're looking for. At this time last year, there were 6,000 homes available.
Okay.
Currently, we're at 20,000. And then when it comes to kind of months of inventory, that's a really good indicator, because it looks at how many homes are available on the market, and then how quickly those homes are going off the market.
Okay.
So last year, at this time, we had half a month of supply.
Okay.
So basically, if nothing new hit the market, all those homes would be snatched up in half a month.
Yeah.
Currently, we're sitting at 3.5 months.
Okay.
So tons of more choice. If you're a seller, you can expect that homes are probably going to be on the market for 30 to 45 days before you go under contract. And if you're on the buy side, if you see a house out there that's been sitting on there, there may be a seller that's open to taking something under list price.
Okay.
Don't expect that out of the first weekend, but as something sits longer, you can potentially get more things in your favors. The seller concessions, a home warranty that's paid for, a lower price, anything like that is going to give you more opportunity to help you get into the house that you want and a good price. So.
Okay, so it's a buyer's market.
I would not say it's
I
wouldn't say it's a buyer's market.
Okay.
I would say it's a balanced market right now. This is really good for kind of both sides. Everyone needs to come together.
Okay.
To get I heard this quote a few months ago. Is really good. Basically, a good sign of negotiation that worked out is when everyone leaves unhappy to a certain level. That means both sides gave up something, but they ultimately came to a meeting of the minds and worked out a deal.
Okay. So do you want to give a prediction going into the fourth quarter here? Because we're just about here going into the fourth quarter, and I feel I work with a couple dozen pretty regular like investors, right? And that are getting loans, and the investors with the increase in rates, investor rates, as you know, are higher. So some of the investors just are not so much in the market right now. So I feel like it's giving like first-time home buyers, primary home buyers, a little bit of an advantage, especially in a market like Phoenix where there's always a big amount of investors. But going into the fourth quarter, I've heard from Realtor partners, if you get into like Thanksgiving, Christmas time, and there's homes still on the market, you might even have a better opportunity to get a deal. But a deal is all relative, right?
Yeah.
But a seller may be a little more flexible, I guess, as you get into Thanksgiving or Christmas. But what do you foresee happening here, or do you want to not take a shot at that, or what do you think?
I won't use the term prediction because predictions are dangerous. But like you said, the investors right now are holding off more often than not. You'll see with a lot of the iBuyers out there, they've started to hold off on buying brand new homes. So it's giving more opportunity for first-time home buyers or people that are looking to right size, downsize, upsize what works for them. It gives them more opportunity and to kind of see what's out there within the inventory, and they also have less competition. So
there you go.
I would say like last year at this time, we had 10 to 15 offers on every single house, regardless of its condition or where it was priced.
Yeah.
Now you could potentially go in, you could be the only offer on the house, and you can really use that to your advantage to get the terms that you want.
Yeah. Yeah. And, with the rates, the thing I want to share, sorry that I didn't earlier, is refinance. Just buyers out there that are worried about the rates. If you can get into a home and you are comfortable with that payment, just refinance. So, my team, you probably know, we put all of our buyers on a rate watch. The day we close them, they go on a rate watch. So if their rate drops 0.5%, anytime after we close them, we're calling them saying, hey, it may be a good time for you to refinance. If you can do it, you can afford that payment, it's in your comfort zone. Ignore what the rates are right now, because to me, it's truly been the best time to buy probably in like the last, 3 years maybe? It's been rough for lenders because we've had dozens of buyers out there that, up until now, they've been priced out just because they couldn't afford to go 50,000, 100,000 over asking price. Now it's turned a little bit more in their favor, and who knows what's going to happen if rates drop, back down again. So I just feel like if you can buy right now and you feel like your rent payment is just obnoxious or just really high, get with a realtor who's going to push you to their lender and at least figure out the numbers, see if it makes sense for you. A good lender is going to go through your tax options, connect you with a tax advisor. To me, it could be a great opportunity for a lot of people to get into home ownership right now.
Yeah, one thing I didn't mention earlier is appraisal contingencies are back. Basically, for anyone that doesn't know, an appraisal contingency is basically a third party comes in, appraises the value of the house. It's a third party independent reviewer to make sure that the house you're buying is worth what you're paying for it. So last year, you had to waive those contingencies to just get accepted on an offer. And if that appraisal came in low, that buyer was covering the distance of that. And that could be a lot of money out of pocket.
Well, it could be a deal breaker, right?
It could be a deal breaker.
Yeah.
Yeah, so potentially you could lose your earnest money on top of that if you couldn't come up with it. But now those appraisal contingencies are back.
Yep.
So
you're protected. The buyers are somewhat protected now again.
Yep, they're much more protected. So if an appraisal does happen to come in low, which is not often,
it's
recently,
not happening. Yeah, I've been asked. I told you I've been asked this week a lot. Where are appraisals coming in? Knock on wood, we haven't seen them come in short. So it's still looking great as far as appraisal values.
Yeah. So just think about that. If you go offer on a house, there's going to be, especially if you're getting a loan, there's going to be another party kind of double checking to make sure that you're not overpaying for that house. So it's another protection for you as well.
Yeah, that's great advice.
Is there anything else kind of you would want to share with the people?
No, nothing else. I mean, I want to thank you for having me and thank you for your partnership and your trust. And, I think people are lucky to have you on their side. The advice that I would give to people that are watching that are thinking about buying is get into the market as quickly as you can, but don't play around with a realtor that's not looking out for your best interest, that's professional, that is on top of the market data, like the now market data. Before we started this, guys, Mike's pulling up that Cromford report. That Cromford report costs money. That Cromford report is the best report about the real estate market in Arizona, and you have to pay to get that. Don't have a realtor that doesn't have those numbers, doesn't understand what's going on today, because what was going on a month ago is different from what's going on today. So I think people are lucky to have you on their side, and it's an honor and a pleasure to work with you and your clients. And thank you for having me on.
Yeah, there's definitely a difference between a full-time and a part-time realtor out there. Major. It's the biggest decision of your life. Do you want to trust it to someone that's doing real estate as a hobby? I know I wouldn't. But thank you for coming on. We'll kind of leave it with that. I will leave your information in the bottom of this post. So look out there. If you have any lending questions, reach out to Dan. He would love to help you out. And if you're looking to buy or sell here in the Phoenix area, just reach out. I'd answer any questions for you. Other than that, have a good one, guys. Bye.
Thank you.